Good morning, investors, and welcome to your Stock Sense morning brief for Wednesday, November 26th, 2025. I'm Malik, and we're here to bring you the latest updates and insights from the Pakistan Stock Exchange. Let's dive right in. The KSE-100 index continued its downward trend yesterday, shedding about 290 points to close at 161,692. This translates to a decline of around 0.2%. It was a day where decliners significantly outnumbered advancers on the main board, with 284 stocks falling against 155 that managed to gain. Trading activity saw a notable increase, with nearly 590 million shares changing hands, valued at over 22 billion rupees. Comparing this to Monday's session, the market closed at roughly 162,000 points, having seen a smaller dip of about 120 points, or down 0.1%, on a traded volume of around 154 million shares. So we're seeing a more pronounced decline and a substantial jump in trading volume, indicating increased selling pressure in yesterday's session. Turning our attention to sector performance, we observed some varied impacts on the overall market. The automotive assembler sector had a noticeable negative impact, pulling the market down, reflecting challenges within that industry. Similarly, commercial banks also contributed to the market's decline, though to a lesser extent. On the brighter side, the fertilizer sector provided some positive momentum, helping to offset some of the broader market losses. From a technical perspective, the KSE-100 is presenting a somewhat mixed picture, but with some underlying bullish signals. Most short to medium-term moving averages are currently indicating a buy action, suggesting potential for upward movement in the near term. However, some longer-term and specific indicators show selling pressure. Looking at the pivot points, the KSE-100's classic pivot stands at around 162,650. Key support is seen near 155,300, while resistance is identified closer to 169,000. Investors will be watching these levels closely to gauge potential shifts in market direction. On the corporate front, there are a few board meetings scheduled for today, November 26th, that investors should keep an eye on. First Fidelity Leasing Motorraba will be considering its first quarterly accounts for the period ended September 30th, 2025. Hinopak Motors Limited is set to review its second quarterly accounts for the same period. Additionally, Imperial Limited has a board meeting planned to consider matters other than financial results. As for last day entitlements for any dividends, bonuses, or rights issues, we have no companies on that list for today. Moving on to the broader economic and market news, we're seeing a blend of positive developments and persistent challenges. On the positive side, Barrick Gold has reaffirmed its commitment to the Reko copper project, signaling significant foreign investment and confidence in Pakistan's mineral sector. Prime Minister Shehbaz Sharif has also eliminated a 0.25% export surcharge, a move aimed at boosting the competitiveness of Pakistani goods in international markets. Pakistan Petroleum Limited has restored gas production at its Adam West field, which is good news for domestic energy supply. Furthermore, there's a proposal for a formal shipping framework with Bangladesh, which could enhance regional trade. And German software giant SAP is showing increased interest in Pakistan's tech talent and IT sector, indicating potential for growth and job creation in the tech space. However, the market is also grappling with some headwinds. The Oil and Gas Regulatory Authority, or OGRA, has determined up to a 7% increase in natural gas prices, which will likely raise operational costs for industries and consumers, potentially fueling inflation. Renewed security concerns are also reportedly contributing to a bearish sentiment in the stock market. In the commodities sector, sugar prices are on the rise due to government curbs on local supplies. The Pakistan Pharmaceutical Manufacturers Association has highlighted key reasons for business closures by top pharma firms, pointing to underlying systemic issues. And finally, substantial losses have led to the closure of the Afghan border, which will disrupt cross-border trade and logistics for many businesses. Regarding institutional flows, our data for today indicates no significant foreign or local institutional buying or selling activity. Both FIP and LIP tables are showing null values, suggesting a quiet day on that front for major institutions. This lack of clear institutional direction might also be contributing to the cautious sentiment in the market. My take on the current situation is that while we are seeing some promising long-term investments and export-boosting measures, the immediate market sentiment remains under pressure from inflationary concerns, particularly the rise in gas and sugar prices, and ongoing security worries. The increased trading volume on a down day suggests that investors are reacting to these broader economic and geopolitical factors. It's crucial for investors to remain vigilant and consider the interplay of these domestic and international developments. The KSE-100 will likely continue to react to these evolving macro indicators and any further corporate announcements. That's all for your Stock Sense Morning Brief today. Thank you for tuning in. We'll be back tomorrow with more updates and analysis. Until then, manage your investments wisely.